Most people spend their entire lives chasing money, but very few ever understand how money actually works. And according to Warren Buffett, the reason is surprisingly simple. It's not because people are lazy. It's not because they're unlucky. It's because they ignore one piece of advice that could quietly change their entire financial future. Here's the strange part. This advice isn't secret. It's not hidden in some expensive course. It's not something only Wall Street insiders know. In fact, Buffett has repeated it for decades in interviews, shareholder meetings, and speeches. Yet somehow 99% of people still ignore it. And the cost of ignoring it is enormous. If you listen carefully to the stories of people who became financially free, you'll notice something interesting. Their success rarely comes from chasing quick money. It almost always comes from patience, discipline, and understanding the long game. But most people today live in a completely different mindset. They scroll through social media and see people getting rich overnight. They see flashy lifestyles, luxury cars, quick trading profits, and viral stories of instant success. And slowly, without realizing it, they start believing that wealth should happen fast. This belief is exactly what Warren Buffett warns people about. Because the truth is, the fastest way to destroy your financial future is trying to get rich quickly. Buffett once said something powerful that most people overlook. He said the stock market is a device for transferring money from the impatient to the patient. Think about that for a moment. Every day, millions of people are buying and selling, reacting to news, panicking during market drops, and chasing hype when something starts trending. But the people who consistently build wealth are the ones doing the opposite. They stay calm when everyone else is emotional. They stay patient when everyone else is rushing. And they keep investing when everyone else is afraid. When Warren Buffett first started investing as a young boy in Omaha, he didn't have billions of dollars. He didn't have powerful connections. What he had was something much more valuable. He had time, discipline, and the ability to think long-term. At the age of 11, he bought his first stock. And like many beginners, he made a mistake almost immediately. The stock dropped after he bought it. Nervous and impatient, he sold it as soon as it slightly recovered. But after he sold it, the stock continued rising much higher than where he exited. That simple experience taught him a lesson that would shape his entire investing philosophy. Patience creates wealth. Impatience destroys it. Years later, this mindset would help him build one of the greatest fortunes in history. Through his company Berkshire Hathaway, Buffett turned long-term investing into an art form. Instead of constantly trading, he focused on buying great companies and holding them for decades. And this is where most people completely miss the point. They hear about Buffett's billions, but they don't pay attention to the time it took. In fact, one of the most fascinating things about Warren Buffett's wealth is that the majority of it came after the age of 60. Not 30, not 40, 60. Why? Because of something Albert Einstein once famously described as the most powerful force in the universe: compounding. Compounding is simple in theory but magical in practice. It means your money begins earning money, and then that new money starts earning more money. Over time, the growth becomes exponential rather than linear. But there's one catch. Compounding only works if you give it time. And time is exactly what most people refuse to give. Imagine planting a tree. If you dig it up every week to check how much it has grown, you'll never allow it to develop strong roots. In the same way, constantly jumping between investments, chasing trends, and reacting emotionally prevents your wealth from ever reaching its full potential. This is why Buffett says his favorite holding period is forever. Think about how radical that sounds in today's world. We live in an era where people expect instant results. They want fast profits, quick success, and overnight transformations. But real wealth almost never works that way. Buffett's strategy is actually boring. And that's exactly why it works. He studies businesses carefully. He buys them when they're reasonably priced. And then he holds them while the power of time quietly multiplies the investment. There are no flashy tricks, no secret formulas, no shortcuts, just patience. Yet despite hearing this advice again and again, most people still ignore it. They jump from one opportunity to another. They panic when markets fall. They chase hype when markets rise. And without realizing it, they keep resetting their financial progress. It's like trying to fill a bucket with water while constantly poking holes in the bottom. Another thing Buffett emphasizes is understanding what you invest in. He often talks about something called the circle of competence. This simply means focusing on industries and businesses you truly understand instead of blindly following trends. For example, if you know how a certain type of business makes money, you can evaluate whether it's strong or weak. But if you invest in something you don't understand, you're essentially gambling. And gambling is not investing. Buffett has always been incredibly honest about this. In fact, he openly admits that there are many industries he avoids because he doesn't fully understand them. Instead of pretending to know everything, he stays within areas where his knowledge gives him confidence. This humility is another reason he succeeded. Most people believe they must chase every opportunity. Buffett believes the opposite. He waits patiently for the right opportunity. He once compared investing to baseball, but with a huge advantage. In baseball, a player must swing when the ball comes. But in investing, you can watch thousands of pitches go by and swing only when the perfect one arrives. That level of patience is incredibly rare. But it's also incredibly powerful. Now here's where Buffett's advice becomes even more important for everyday people. He often says that the best investment most individuals can make is not trying to outsmart the market but simply investing consistently over time. For example, many people stress about choosing the perfect stock. They analyze charts, follow news headlines, and constantly worry about timing the market. But Buffett repeatedly suggests that most investors would do better by regularly investing in broad market index funds and letting time do the heavy lifting. The idea is simple. Instead of trying to beat the market, become the market. As the economy grows, businesses grow. As businesses grow, the value of investments increases. And over long periods, this growth has historically created enormous wealth for patient investors. But once again, patience is the key. The market will rise and fall. There will be recessions, crashes, and scary headlines. People will panic. News channels will predict disasters. Social media will amplify fear. Yet every time this has happened in history, something remarkable followed. Recovery, growth, new highs. Buffett understands this pattern deeply because he has lived through decades of market cycles. He has seen crashes that terrified investors. And during those moments, while others were running away, he was often quietly buying. Why? Because fear creates opportunity. When people panic, they sell good businesses at low prices. And that's when patient investors step in. But here's the emotional challenge. Buying during fear feels uncomfortable, feels risky. It feels like everyone else might be right and you might be wrong. That's why discipline matters more than intelligence in investing. Buffett himself once said that investing is not a game where the guy with the highest IQ wins. Instead, the person who wins is the one who can control their emotions. Think about that. In a world obsessed with complex strategies and financial tricks, the real secret is emotional control. The ability to stay calm when others panic. The ability to stay patient when others rush. The ability to stay disciplined when others chase hype. This mindset doesn't just apply to investing. It applies to life. Because success in almost any field comes from doing simple things consistently for a long period of time. But humans are naturally drawn toward excitement, novelty, and quick results. And that's why Buffett's advice is so easy to ignore. It's simple, but it's not easy. You won't feel the thrill of overnight success. You won't have dramatic stories to tell. Instead, you'll have something far more powerful, slow, steady, unstoppable growth. Imagine someone who invests consistently for 30 or 40 years without panic selling, without chasing hype, and without abandoning the strategy during downturns. The result is often astonishing. Small amounts turn into large amounts. Large amounts turn into life-changing wealth. And it happens quietly, almost invisibly, until one day the numbers suddenly look extraordinary. This is the magic Buffett has been talking about for decades. But there's another deeper lesson hidden within his advice. Money is not just about numbers. It's about behavior. Two people can have the same income, the same opportunities, and the same information. yet end up with completely different financial outcomes. One builds wealth while the other struggles constantly. The difference is rarely knowledge. It's discipline. Buffett lives this philosophy in his own life. Despite being one of the richest people in the world, he famously lives in the same house he bought in 1958. He drives modest cars. He avoids unnecessary extravagance. Why? Because he understands something many people forget. Wealth is not about showing money. It's about growing it. Every dollar you spend today is a dollar that could have been invested and compounded for decades. That doesn't mean you shouldn't enjoy life, but it does mean understanding the trade-offs between consumption and long-term growth. And when you begin to think this way, something interesting happens. Money stops being emotional. It becomes strategic. You start asking different questions. Instead of, what can I buy today? You start asking, what can this money become tomorrow? That shift in thinking is exactly what separates people who build wealth from those who constantly chase it. And this is why Warren Buffett's advice remains timeless. Not because it's complicated, but because it's rooted in human psychology. If you can control your impulses, stay patient during uncertainty, and trust the long-term process of compounding, you place yourself in a completely different financial path than most people. But the decision ultimately comes down to you. You can follow the crowd that constantly chases the next big thing, reacting emotionally to every headline and market movement. Or you can quietly adopt the mindset that Buffett has demonstrated for more than half a century. A mindset of patience, a mindset of discipline, a mindset of long-term thinking. Because in the end, the biggest difference between those who struggle financially and those who build lasting wealth is not luck. It's behavior. And now I want to ask you something. Do you believe patience is really the key to building wealth? Or do you think there are faster ways most people should be focusing on today? Share your thoughts in the comments below. I read as many comments as possible, and I'd love to hear your perspective. And if this message made you think differently about money, investing, or your financial future, make sure you subscribe to the channel for more powerful insights inspired by legends like Warren Buffett that can completely transform the way you see wealth.